We just going live on all platforms, so I'll give it a minute for everyone to join us. So right now we are on Zoom, on YouTube, on Facebook, on I think even LinkedIn and Twitter. So wherever you're joining us from right now, would be really cool to see in the chat where you're joining us from. Would be really good to know where you're joining us from. How did you hear about us, me or us, acquisitions.com, and maybe a few thoughts on or words on what are you expecting to learn today. I'd love to see that, and I'll write those things down, and I'll make sure I'll go through those things today in the workshop. I'm super excited. Hopefully you set some time aside, because I'm going to go through a lot, and hopefully you have a pen and paper or a note opened in your computer or anything that will help you take some notes. And I see some people already are posting. Cool. So we have people from Toronto, from Texas, from Kansas City, Kyle, Apollo, Stephen, some names that I can't pronounce, so I won't butcher names that I can't really understand. Kansas City, Knoxville, Toronto, San Jose, South Africa, Quebec. I like Canada, man. Then Peña Turnaround, Los Angeles, Wales. Wow. Dara, UK, England, Berlin, Moscow. Wow, this is pretty cool. London. This is insane. Well, where else we got some people from? First of all, I appreciate everyone who woke up early or is joining us in the middle of the afternoon or evening or whatever it is for you. Super cool. And then let me know maybe what is the biggest thing you want to get out of today. Would be really cool to know. So I'll put some notes on that and make sure we go through those things, because I have a lot to cover either way. One of those things, actually, I'm going to cover a roll-up that one of the guys in our community went through. Trinidad and Tobago. Freaking cool. That's awesome. So my thought process here. So one of our guys went through a roll-up of 16 different companies in less than a year, actually around 6 months, totaling of around $62 million in EBITDA, above $180 million in revenues. I just went through some of those notes with our clients, like 2 or so hours ago. We had a Q&A call with our clients, and we went through a bit of that. I'll try to go through some of that today, because that's what I'm mostly excited about, the idea of doing a roll-up, and we're potentially partnering with the guy to take it public. Super interesting. Okay, so I see some questions. Cool. Financing, agglomeration, structure, share structure. Virginia, first company in Germany as an immigrant. Cool. Good stuff. All right, guys. So first of all, I don't care where you're at. I don't care what's your background. I don't care if you're a business owner or you never had a business before. I don't care if you already bought businesses or sold businesses. Some of our clients are all of the above. Like, we literally have people who finished college and bought a multi-million-dollar businesses. We have people like, I think one of the crazy stories, one of our guys, Leo, he's Nigerian, living in Ukraine, bought a multi-million-dollar business in the US. We have people who are running businesses doing above 100 million a year in revenues, working with us, buying companies. We have people who sold companies already, had a large capital event, and then came to us and wanted to buy companies instead of starting one from scratch, because they understood how difficult it is to start business from scratch. I'm sure some of you here are business owners, and if you are, let me know in the chat. And if you started it from scratch, let me know how difficult was it to get it to a point where it is right now. And by the way, I see a lot of people are joining us. So if you can turn on your camera, that'll be awesome, because it will make me feel more engaging with you versus talking to random black squares on Zoom. So thank you for everyone who turned on their cameras, everyone who didn't and is open to do that. That'll be awesome. Cool. So I'm also going to share my screen, because apparently I'm a very visual guy. So perhaps it's going to be cool for you as well. So what I'm going to do today is work with this pretty cool notepad software. And I assume now you guys should see me and the notepad. So my plan today is to create different frameworks and structures for you to really view acquisitions from, kind of like in the way that I view it right now. So let's go through a few things that I want us to go through. So first of all, I want to go through today a bit about me and my background. Who am I? So let's go through a few things, right? So a bit about me, and my name is Moran Robert, if you don't know, and you just heard about us. I want to go through a bit about acquisitions.com, which is our company, right? I want to go a bit about kind of like, obviously, how we can help you and why even buying businesses, in my opinion, is the best path for at least the next decade with what's going on right now with the baby boomers. I'm going to try to do it all of those structures, paint a little bit, give you frameworks, give you ideas for what is most important in acquisitions, why even acquisitions in the first place, and maybe even paint a bit. And if you guys are going to like it, I might buy some kind of a pen for the next workshop so I could be more accurate with my paintings. But I really want to support you guys. And I think this is a cool way to view things in a visual way, because I know for me, it's really, really important to view everything in a visual way, in a very simple framework and structure. Otherwise, I can be very overwhelmed. So with that being said, I'm curious in the chat if you heard about me lately for a while now, like really, really interesting for me to understand, like, are you following me for a while? Are you watching my videos for a while? Or just heard about me like right now? It's super, super interesting to know that. Let me just see. Roland is saying, I started my company in 2006 as a one-man band. Now we employ 100 people and will turn over 30 million this year. It's taken 15 years of hard work. Now I'm looking at acquisitions to double the revenue in the next 2 years. First of all, man, congrats. Like, I can't even imagine how difficult it is to grow a business for so many years organically. So taking my hat off, man. Like, when you're going to figure out this world of acquisitions and the idea, like you said, you can double your revenues so fast with one deal. All you need is one company at your size that you already know how to operate and manage. I'm super, super excited for you. And I appreciate people like you so much. Like, starting a business from scratch is difficult. Running a business is difficult. Keeping a business alive is difficult. Most new businesses fail in their first 5 and 10 years. So the fact that you're even alive is almost a miracle, literally, after 15 years, which is amazing. So salute. Anyway, a bit about me, for those who don't know. I see some people just heard about me for a week ago. Some people heard about me for half a year. Cool. Seen a few videos over the weekend, learned about you 1 week ago. Cool. So no worries about that. Just so you know, my beginning is kind of like in flowers. Actually, I sold flowers when I was like, 16, 17. Then I went through the military. I actually went through the Israeli military for a few years there. And after that, I kind of like started my entrepreneurial journey. We should probably attach the video when I talk a bit more about that. I don't want to talk and rumble too much about myself, but I started by just doing random stuff online with domains, which led me to kind of like almost doing my first acquisition by accident. And since then, I went through, at this point, I would say around 12, 13 of my own deals. And if you include also our clients at this point, it's 100 plus deals of deals that I was involved directly or indirectly. And this is like active acquisitions. My goal and my role right now moving forward is to be more of a passive investor. So for those of you know, kind of like taking an angel investor, positioning. Right now we're closing on, just to give you an example of what a deal might look like. Right now we're closing with one of our community members, Jason, on a masonry deal. It's a multi-million-dollar business in the US that he's buying, is going to operate. And we raised the capital for him from our network, and I'm going to be one of the investors. So for me, I like that, because to present those ideas to you guys, first of all, they changed my life. And to present it to people like you, it allows me to connect to amazing people and to potentially invest with you as well. After obviously you learn and understand kind of like what it's even all about. Because I know for a lot of you, you're gonna hear a lot of those terms in the first place, in the like for the first time. And I know that some of you will eventually want to stay in touch with us and will allow me to invest potentially in your deals as a passive investor. And I really believe that for the next decade, doing small business acquisitions, there are, in my opinion, is going to be the best asset class, if not already, if you find the right deals, because the returns that you can get with small businesses are unlike anything in the public space. So my background is mostly media technology. I had a successful app company, a media company, an agency, a software company, and we had a very large website similar to BuzzFeed that just went public, if you're familiar with that. I see a lot of people joining us, so I wonder if we need to wait with that. But anyway, my goal right now is with acquisitions.com to create a network of people who want to buy and grow businesses by acquisitions, and to connect them also to investors in our network. You know, we have a lot of people who want to actively run businesses, and we have people who want to passively invest in deals. So I feel like what we're doing with acquisitions.com is creating this marketplace, this community of investors, of people who want to learn, and it's kind of like an education platform, everything together. Our goal in the future is to also help people go public with it. I really, really want to take it to the next level, because I really feel like it's a journey that everyone can go from the beginning to like the highest limits possible. Like I really see a journey when someone join us, he can go from zero to buying a successful 6 or 7 or 8 figure business, like some of our case studies have that I'm happy to share with you some of them today. Buy one business, continue to grow it by acquisitions, and then take it public. So Jason, the guy that I just mentioned that we're closing a deal with, he's doing his 4th acquisitions right now in less than 2 years. At some point, his business will be big enough that it can go public. And I believe that with acquisitions.com, we can help him then go public, raise the capital, invest in his deals, etc., etc. One of the roll-ups that I'm going to share with you, like I said in the beginning, for those of you just joining us right now, it's a roll-up of a guy who created a business doing $62 million in EBITDA, in pre-tax profits, in less than a year, by basically merging 16 businesses in one sector that we really want to see how we can make him our first case study right now of going public with him. He was able to buy on average and agree on average to get those companies for 5 times multiples. And to give you an idea, a similar company at that size as a public company is worth around 30, 32 times multiples of EBITDA. So he pretty much created, if we can take it public, a multi-billion-dollar company in less than a year, which is unheard of. And to also add on disclaimers to that, this is not a get-rich-quick thing, guys. Like, entrepreneurship is difficult. Running and buying businesses is difficult. Acquisitions is next level entrepreneurship. This is difficult. Why do we have a guy who can paint on my screen? I don't like that. If you can paint on my screen, please don't do that. Anyway, so I started with a bit of flowers, then deals, and then can we go IPO? That'll be awesome if we could do that. Anyway, what else I want to share that? Another thing I want to share with you guys, my biggest excitement and enthusiasm about this space is the model of, so there are 2 public companies, and I'm sorry, I'm just painting with my mouse, so it's a bit weird. But those are 2 companies that I really like to take as almost as a case study. So WPP, for those of you who don't know, it's a company that is basically a public company, which is they're a marketing agency. That's what, they're a media company buying marketing agencies. And I'm thinking about what they're doing is, if you took me back 5-6 years ago when I had my marketing agency that eventually I sold, and now, by the way, I'm kind of like a global citizen. I'm living on an island in Europe, in Cyprus, just because it's better for tax structure, and when you have a capital event, which I can talk to you about that as well, in different offshore countries, etc., if you feel like that's something that's going to be interesting for you. But if you took me 5 years ago, that might be the path that I would take. Instead of buying one company and sell it right away, kind of like very fast, and flipping it for a very like life-changing capital event, I think that if I thought longer term, I would keep on doing something like WPP, which is after you buy one company, go and buy hundreds of those companies at the same sector. And WPP is pretty much, I mean, that's what they're doing. They're going out there and they're buying every marketing agency that they can. They're a multi-billion-dollar company. And XPO is a similar one, but in the tracking space. So they're buying tracking companies. And the reason that I like them is because one of our best case studies is a guy named Borislav. He came to us, like, I'm not sure we're going to share with you his video, but if you stay with me until the end, I'll share with you a link on how you can check his testimonial and his interview. And it's insane because he bought a business doing $13 million a year in revenues without using his own money. And when you're looking at a company like XPO, that's pretty much what they're doing, but they're doing that in a volume of companies, right? So they're buying companies one after another. You can call it a roll-up. And obviously they're a public company, so there's a lot of value to that, for the shareholders, for the founders. And I feel like what we're doing with acquisitions.com is creating a platform to create and connect with entrepreneurs and investors who want to be involved in companies like that can grow by acquisitions, that can grow to become so big, so amazing, that, just creating win-win scenarios for everyone. And I see, cool, we have Alexander. I worked for XPO for 2 years. Amazing, man. I'd love to connect if you want. I really, I admire the company, I admire the founder. It's really, really amazing. In the tracking company taken in public, OTCBB. Cool, these are gold roll-up companies. Yeah, beautiful, Mr. President. Cool name. I don't know if it's a real name, but it's cool. Yeah, we'll definitely stay in touch. Message me or Martin from my team if you can save that. I'm happy to connect, Alex, for sure after the event. Cool. So let's get started. So my goal today is to talk a bit about, there are basically 3 phases. Oh man, I gotta buy some nice pen to be able to do these things nicer. I wasn't expecting that. I'm so bad at painting with my mouse. Anyway, 3 phases for a deal, right? Or maybe that's not the best diagram. Let me do this. Let me do this with the text, because otherwise it's going to look really bad. There's the before, there's during, and there's post-deal. And I would also add on top of that above them all, guess what it is? Let me know in the chat what do you think it is. But it's basically the mindset. And I'm not going to go woo-woo here or anything like that, although some do consider me a woo-woo guy after doing too many shamanic and vipassana retreats and psychedelics, but which I would probably recommend to do them after you make some money. Otherwise, they could probably mess up with your mind too much. Those are the phases, but above them all are the mindset. Because if you don't have the right mindset, if you're not focused enough, if you're not clear enough, if you don't believe in yourself enough, you won't be able to do those. And I'm not the first one to say success is like 80% mindset, 20% the actual tactics. So that's what we're going to go through. And I also believe that there are 3 things or 3 goals that all of us have when they go into business. I think this is a better diagram than the pyramid thing, but the way that I see that is everyone come to this world of business or buying businesses or acquisitions for income. When you have the income, you're thinking about your lifestyle. And when you can have both, then we all start to think about impact as well. And I'm just sharing those things because I think from the get-go, if you can combine all those things together and really be clear on what that looks like for you from day one, when you're successful, it's going to make a big difference in your life. So, for example, a lot of people say, hey, and again, everyone have different goals, different learning curves, different, places that you're all at in life and scenarios. But some people come to this world of businesses and acquisitions and say, you know what, I want to make enough income so I can live the life that I want. And they don't think about that first. They don't think more than that. Then some might say, you know what, I don't care about my lifestyle. I just want to work all day. I want to make enough income. And maybe then they have the impact in mind. But usually you can start to think about the impact only when you have enough. The way that I see that, like people really start to think about the impact when they have enough money and understand that money won't make them happy. So they really start to think about what will wake them up in the morning with a bit of motivation. Otherwise, life sucks. And that comes from someone who traveled in probably too many places around the world, drank too many random cocktails and drinks on random beaches in the world, and found out that he was like almost depressed. Because at some point, I believe that if you don't work or do something for impact, like I don't know, man, like there's only so many nights you can be drunk and not want to kill yourself eventually. So all I'm saying is that I wish I had that framework like many years ago, because that would make me look at life a bit different. Like the fact that think about your income, your lifestyle impact from day one. Understand that your income at some point won't make you more happy if you will make more. Like I think I think they said it about like 80,000 a year or something like that. Like making more money won't make you more happy. And at that point, you'll start to think about, cool, what kind of lifestyle I want? Do I want a family? Do I want friends around me? Do I want to live in a specific city? But the real value, I think, comes from impact. Like, and again, I'm not the first one to say that. Like, it's all about growth and contribution. If you're not continually growing and contributing to something bigger than yourself, your life going to be suck. Like it's going to suck internally. I don't care how much money you have. So all I'm saying is that let's make you shit tons of money, but let's make sure that when you're going to get there, it's going to feel cool. And like there's a quote that I really like, something like, when you pick a goal, when you reach that goal, you really want to make sure that you pick the right one, right? Like what is important to you, and really think about that. And that's something you want to ask yourself like every day. If you write your goals, if you write some affirmations, like wake up in the morning and really think like, what do you really want? Because sometimes we go arbitrarily to random goals that then we find out are not the goals that you want. Anyway, I won't talk too much about those things because this is a workshop about acquisitions, but I think it's really important to start there. Otherwise, and again, just from my personal experience, like life can get really messy internally, and then you take a lot of your money and just pay them for random therapists. So let me save you some money on therapists. Cool. So acquisitions. Why I think acquisitions is the way to go, right? Because you could go out there, you can do different things, and we're going to go and compare probably some of them a bit, like real estate, stock market. If you want, we can talk about crypto or whatever you want. But let's talk a bit about why acquisitions in the first place. First of all, I think it's fun, right? I don't know if you think fun is important, but I think it's fun. Like talking to business owners, doing deals, being a deal maker. You know, for those of you familiar with TV shows like The Profit with Marcus Lemonis, I mean, if you watch that TV show and you're not like, hey man, that's looks pretty interesting. If you don't never watch that, I think if you're going to spend your time on a TV show, it's probably going to be a TV show to spend your time on, because you can really learn some cool stuff. But I think doing deals, dealing with people, every person, every seller is a different person. Some of the people and sellers you're going to talk to as a potential buyer to buy their business are going to be fascinating people who work on their business for sometimes 10, 20 plus years, 30 years. You can learn so much about that sector, so much about how to run a successful business in that sector. You will learn, I can guarantee to you, you will learn, if you have a goal of owning a successful business in a specific sector, you will learn more about that sector in 6 months of talking to business owners who run successful businesses in that sector than sometimes a lifetime of trying to start a similar business from scratch. Think about it. You get experience, you get to talk to someone experienced who will share with you more about their successful business than they will probably share with their wife. Like there's only so many people that a seller, a business owner, share everything about their business. Most of their employees probably don't know as much as they'll share with this potential buyer, because they have to. They need to, you can say, convince the buyer on why they're the best option and the best business they need to buy. So it's fun. You will learn. It's for me, I think what excites me in life is kind of like the art of the deal. It's kind of like doing negotiations, being the visionary, coming up with ideas and get them executed. Right? I know that for me personally, when I'm doing repeatable stuff again and again and again, I don't like those things. I like to meet different people, interesting people, come up with random, crazy, big ideas, and build a team around me that can execute on that. That's what really got me excited when I was all in on this. Let's find a deal. Let's find a deal. And I'm slowly kind of like in a cycle in my life that I'm trying to find. And I share with you those things because I was really thinking about it a lot. Like, what is really fascinating for me in this world? And I think it's the art of the deal. It's meeting the interesting people. It's coming up with the vision. It's building a massive vision, finding the people to help execute on those visions. Right. So that alone is worth the idea of doing deals, in my opinion. Plus, there's a lot of money in that space. Like, look at the biggest companies in the world, how they're growing. They're growing by acquisitions. A lot of you probably heard about acquisitions, like, you have Facebook that bought Instagram, they bought Instagram for $1 billion, and now Instagram is a freaking, it's a monster. They bought WhatsApp, right? You have companies like Google who bought YouTube. They're not creating those entities from scratch internally. They could, but why? I mean, why would they do that? And for those of you who raise their hands, I see in the chat, don't raise your hand, just put any questions or thoughts in the chat, because I'm seeing the chat and I can kind of see kind of like any thoughts, questions, or comments that you have around the subjects that I'm going through. Why they're buying those companies versus starting them from scratch internally, which they could, right? They do that because they save a lot of time. They go into already proven companies, proven models, proven team that is worth probably more than anything, especially in the technology space. You see a lot of, acquisitions just for the sake of buying talent, for the sake of buying teams that are already working together for a while, that already have a proven process, proven product, have revenues, have profits, have processes. That's the reason to do that. You buy brand recognition, you buy happy customers. And to start those things from scratch is very difficult for those of you already tried or have businesses that they started from scratch. So the biggest companies in the world, that's what they do. They buy companies, right? That's what they do. And that's, you have Amazon. Amazon, what they did, they bought Audible. Are you familiar with Audible? One of my favorite ones. That's not a company that Amazon created from scratch. They bought them. Right? They bought now Whole Foods. They did MGM. I don't know if it's finalized, but they're buying companies. So that's one of the reasons why the biggest companies in the world do that. You can do that as well. And the beauty is that when you buy companies, you don't necessarily need to have millions of dollars in your bank account to do those acquisitions, right? You can go out there and buy businesses using the acquisitions target assets and finance those assets against the business itself or the assets of that business to buy it. And I know when I understood that for the first time, it was a big aha moment for me many years ago. And just think about it. The idea that you can go out there, look at a business that you don't own, that business have assets, right? They have assets on the balance sheet, or asset as a business in general, right? They have cash flow, they have cash, they have different assets, receivables, inventory, real estate sometimes. You can then go to financial institutions or any financial partner and tell them, hey, Mr. Financial Partner, which there are dozens of ways to find those financial partners. We're going to share some of them today, and dozens of different capital structures and deal structures you can have. But you can basically go look at a business that you like, then go to a financial partner and tell them, hey, financial partner, there's a business I want to buy. How much can you loan me, or how much money can you give me so I can buy that business? And if that thing doesn't excite you, I don't know what will. Like, you can literally go to a multi-billion-dollar company. I'm not suggesting you'll do your first deals, but you can go to a business doing a few million a year in sales, and then go to financial partners and tell them, hey, I want to buy this business. How much money can you give me so I can buy that business? and they'll give you a proposal. You know why? Because that's how they make money. The bank will give you money because that's how they make money, by giving you money and charge interest for that. For me right now, I'm looking for great investments. I'll give you money if you give me a good deal. Show me that you have a good deal, I'll give you the money. So people are out there looking to invest. Financial institutions out there are looking to invest. That's how they make money, or that's how investors and financial partners are protecting their capital to some extent, right? They're investing, they diversify their portfolio. And one of the best things you can do if you're going to pursue this path of acquisitions is to provide solutions to investors and financial institutions, because people are looking for asset classes to invest their money in, right? What else are they going to do? I mean, yes, you can go out there, you can invest in, let's think about different asset classes, right? Because one of the biggest questions I'm getting from people is like, why would someone give me their money, right? So first of all, you need to think less about yourself. You need to think more about the deal that you have. How good is your deal? And what other opportunities the investor have? Like, what they're going to do? They're going to invest in startups. Most startups fail, guys. 90+% of startups fail, even if they are being backed by venture capital firms. Like, think about this. Some of the smartest people in the world, they run venture capital funds. They invest in startups and they know in advance that like 9 out of 10 will fail. On every Airbnb, Uber that you hear about, there are thousands of random names that you never heard about that still went through that startup phase. So you can invest in startups, but the risk of fail is huge. Obviously, if you invest in a fund, that's different, right? It's a different way of allocating capital, and they know that the return on one investment will give them the returns that they need. But I definitely wouldn't want to be the person who's putting all of his eggs in one basket as a startup entrepreneur, because you just know from the get-go your chance of failing is huge. Like, what else are you going to do if not acquisitions, and when? You're going to do organic growth? Yeah, you can do organic growth, but guess what? It's just going to be slow. And all businesses are going to have organic growth either way. All business, even if you buy it and you do acquisitions, going to need to have different departments like sales, marketing, operations, HR, finance. You will need to grow and operate the business organically. But if you start from scratch and you try to grow it organically, it's just going to be slow. It's risky. It takes too much time. All right, so let's think about some risks. And I need to use more of that. I'm sorry, I'm just rambling here with forgetting that you guys see the screen. So think about this, right? Startups. Let's see. Risky. Huge risk, right? Organic growth. Slow. Think about how many people you need to go through, how many campaigns you need to test, right? Every business needs to have sales, marketing, operations, HR, finance, legal, etc. Think about what it's like to hire all those different departments from scratch. No joke. It's not kids play, right? You always need to reinvent yourself if you grow organically, right? If you go by acquisitions, you can just go and buy that innovation. And again, at some point, especially if you're kind of like at 7 figures a year plus, like growing more than like 10-20% a year is like insane. It's very difficult at some point to have growth of more than 10%, 20% a year organically, unless you like super reinvent yourself and find something completely pivot in your business. What else? Real estate you can do instead, but I don't know. For me, I rather not deal with toilets too much, or renovations or painting. I don't know. I don't want to do that. Some might say, so just do large properties with hundreds of properties at once and have a property management team. Well, But then I would say, what's your upside on each apartment? There's only so much upside you can have on each yep, just see we're recording now. So I guess we'll have the recording from here, or unless we're recording on a different thing, no worries. So real estate, right? What that looks like. I mean, how much can you really do in a property to really increase rent? Not much. I mean, yeah, you can do a little bit, you can change a little bit, but can you 10x your business, your property? Not really, right? Can you 10x your rent price? Not really. What else? So I might say, hey, let's make money in the stock market. Well, I mean, first of all, you're paying crazy multiples compared, right? So high multiples. And the multiples is basically, like, for example, when you buy a small business, you usually pay, there's few ways to value a business. The easiest way is kind of like to put a multiple on the pre-tax profits. So think about it this way. When you buy, and I'm going to share with you, for example, in the roll-up case study, our guy pretty much bought businesses, agreed on businesses on 5x, right? So if a business is doing 1 million in profit, in pre-tax profits in EBITDA, he's basically buying them. So on 1 million, EBITDA is paying 5 million. Oh, and it's crazy. Every time new people join us and it's moving my screen. So on every 1 million EBITDA is paying 5 million. Why? Because those are private companies, right? When we go to the stock market, you find the same companies, obviously larger companies, but for 30 times multiples, for higher. You look at companies like Tesla, man, you talk crazy multiples. And guess what? You're not really in control. I think one of the biggest things that I'm kind of like, the reason that I really like small business, the fact that you're in control. Like with public companies, guess what? You can't really do much. If you're invested in Tesla before Elon Musk went on Joe Rogan, and Elon Musk decided to smoke a joint on Joe Rogan, and then the stock goes down, whatever percentage went down, I think like 20+%. And again, maybe temporary, it's okay, but still, you're not in control, right? If your stock one day goes down 20%, why? Because you don't really know what's up. There's only so much you know about the business. There's only so much you can control about the market, especially now. A lot of people say we're in a bubble that's about to explode. You never know. Some people say we're going to go up for the next whatever few years. You're just not in control. If it's a small business that you own, you're the master of your universe. Very different, right? You want to grow, guess what? It's up to you and your motivation and your goals and your vision and your clarity. You want to be a bigger company? Go out there, buy more companies, right? And again, look at the historic returns on stock market. Like, what is it, like 8% on index or something on a yearly basis? And that's assuming you're putting on the index. I mean, those who pick stocks, most of them are not successful. Like even if you look at Warren Buffett in the last years, I mean, his returns are lower than the market as far as I remember. So unless you're really dealing with a large capital there, it's really difficult to build wealth. Not to even like consider the fact that in my opinion, the way to deal with the stock market is to perhaps preserve your wealth and diversify a portfolio with it, but not necessarily to build your wealth. So if you're already wealthy, it's different play, right? You just diversify your portfolio and maybe you put a bit here, a bit there, a bit there. But if you like want to jump kind of like in different economic statuses, I don't think there's a better path than acquisitions, because you can do like a multiple 6, 7 figure in one deal, like to your net worth, sometimes down to your bottom line, especially if you have an exit, right? Obviously if you have an exit, but a lot of time, a lot of the money is still coming on a yearly basis with dividends and obviously some other perks and income that you can take from each business that you own. Why else acquisitions? What about the baby boomers? There are 71 million. 71 million. How much is it? 1, 2, 3 million baby boomers in the US alone that are going to retire in the next few years. And guess what? A lot of them have businesses they want to sell. They don't want to own those businesses. their kids don't want to run their boring business after they retire. Like there's a lot of companies out there, like, I don't know, plumbing companies. I don't know, people who go to college and say, hey, I want a plumbing company. But guess what? Those are super profitable. Every young kid now, what they want to do, they want to build the next Uber or whatever, Airbnb. They don't want to go and run their dad's plumbing company. So what dad's going to do? Dad needs to sell the business. This number is huge, guys. Seriously, insane. Like, it's not the one I wanted. Like, just that alone should get you excited, because I don't care how many people are going to watch this training, going to work on acquisitions long term. There are enough deals out there. Like, enough deals out there, guys. What else? One good acquisitions. Oops, why it became yellow. Let's see. One good acquisitions will put you in the 0.1% of the wealthiest people in the world. Now, again, this is US numbers, UK numbers, Australia, other countries. I'm not sure about the exact numbers, but they're big. All I'm saying is their opportunities are out there. And we're going to talk a bit about how to find those business owners, how to reach out to them, what size of businesses I suggest to you to go to begin with. But again, I'm trying to sell you on the idea first, on the fact that, guys, one deal will put you into like 0.1% wealthiest people in your country, in the world. Like at this point, if you own like 7 figures in net worth, like, you're considered wealthy. And there's like not much. Like, here's the thing: for those of you who already have businesses, like multiple 7-figure businesses, that there's like not really much more that you can do with, I don't know, I'm thinking like with like even 300,000, 400,000 a year that you're taking home. Like, above that, there's not much that you can really do unless you're like becoming stupid. You know what I mean? Like, in terms of like personal expenses. So one good deal can easily get you there, like easily get you there. And I'm not even talking about what kind of numbers you can make at an exit, right? This is like just numbers. I'm talking about potentially you're just taking from like dividends or an income that you're paying yourself, or combination of them, right? Because some of you will want to run the business yourself. Some of you will want to hire someone else and use the cash flow to bring in a team, a professional team, while I don't know, some of you just want to sit on the beach, do nothing. And some of you might want to focus on more deals. So whatever is it for you, it is for you. I know that one deal can get you there. I really believe that at this point, having a job, working for someone else, is probably more risky than running a business. I mean, look at what happened with Corona. Damn. I mean, a lot of places, it looks like we're going for a run too. I don't know what's going on with where you're at, guys, but it looks like no one knows what to do. Yeah, just job, just over broke. Exactly. I mean, I think COVID proved everything, like really proved it for us. Like, sometimes we think we're in control of this life, but there's a lot of things we can't control. So I think, owning a business, like, damn, look at what happened to restaurants, to cinema malls, to different businesses that really got affected from that. I mean, that's insane. So obviously it's, again, thinking about, okay, how much you want to diversify yourself, if you're a business owner or not. But I think the biggest lesson that I got from that is, man, like, the world is crazy. I need to be in control. that's the biggest thing that I got from that. I think, like, the more I'm in control, the more I have like a dry powder to deal with when apocalypse comes into play, the better. So that's why I like the small business world. Like, you can take control of things. You can be in control. You're not dependent on random people. And again, don't get me wrong. Like, if, some people who owned restaurants or businesses that really get hurt, it's sad. It's really sad. But all I'm saying is that the best we can do is the best we can do, right? Like take control of whatever you can. And for me personally, I just don't want, at least that most of my portfolio will go down because of a random tweet or random, smoking a joint. Although I do have a lot of money in both of those areas, but all I'm saying is that think about how much you need to diversify yourself. Anyway, sorry, just me ranting on random thoughts here. Let's move on. So let's talk a bit about misconceptions of what you need to buy businesses or what you don't need to have. So first of all, let's write it down. So you don't need a degree. You don't need to be existing business owner. You don't need to have millions in the bank. Again, don't get me wrong, all those things can be valuable, but you don't need them necessarily to do deals. And I can share with you testimonials and case studies of people who had none of the above and even less. You don't need to be an accountant. Sorry, I guess writing things down and speaking is a bit weird. You don't need to be a lawyer. A lot of people think, oh man, if I want to do a deal, I got to learn and be an accountant, be a CPA. I need to understand numbers. Well, yes, you do need to understand numbers, but you don't need to have a degree, because I can show you like in a few minutes what you need to understand in terms of numbers in a business, especially in terms of making an offer to buy a business, which that's what you really need to begin with. Lawyer, you don't need to be a lawyer. That's why there are lawyers out there. You can pay them. And the beauty is that when you learn the process right, you will learn how to use the acquisition target cash flow to pay for the lawyers, right? Ideally, it's closing. You don't need to be, or what else? What other limiting beliefs you have that you think will hold you back? You don't need to be investment banker or have some kind of investment banker experience. Rich parents, you don't need those. I don't have those. You don't need crazy contacts, I don't know, governments or whatnot. All of those are just limiting beliefs of what you think you need to have. If you're a good person, you can talk, you can do deals, and some of you might say, hey, what's the downside? How can I, protect myself? Well, we'll talk about that as well, how to protect yourself in each deal. Probably going to get to that. I'll try to do that. But in a nutshell, just the beauty, like one of the best inventions in the world is, invention like limited companies. The fact that you can protect yourself behind entities. That's literally probably one of the best inventions out there in the world of capitalism. We'll see if we have some more time to talk about it, but that's one of the ways to protect yourself. I just want to see the chat. Yeah, in terms of time, here's the thing. So how can I put it? I do believe that the more time you put into anything, the better you become at it, right? 100%. Here's the thing with acquisitions. There's only so much you can do on a daily basis when you're looking for a deal, right? It's different than when you already own the business. But when you look for your first deal, like what we tell our clients is like, have a consistent schedule for putting at least 1 or 2 hours a day into that. Because there's only so much you can do above that. Because a lot of the work in the space of acquisitions is just waiting. Waiting for replies from sellers, waiting for replies from brokers, waiting from replies from financial partners or potential investors or institutions or lawyers or accountants. And between us, and let me know in the chat if I'm wrong, like how many of you can say that you're actually focused each day for more than 2 hours? I'm talking focused work of uninterrupted time. When you shut down everything, I'm talking no WhatsApp messages, Instagram or email, whatever is your thing. Like, can you tell me that you focus for more than 2 hours on one task? Like 99% of society isn't. So I can tell you this, if you could put 1 or 2 hours a day on acquisitions and really be focused at those 1 or 2 hours, you can really make great progress. And I think it's with everything in life. Like, it's like, getting in shape. Like, work out every day and eat well every day, like how much time you really put into that. You work out 1 hour at most, you don't need more. Then how much time you eat each day? Total, what, 1 hour? So 2 hours a day. But are you consistent? That's the real question here, right? So I'd say with time, the most important thing is consistency, right? Versus sprints. Because a lot of people think that they can do nothing for 1 month, then end of the month they go out there and they sprint for 8 hours, or they try to buy a business for 8 hours just in the weekend, but then they shut down their phone for the rest of the month. That won't work, right? If you're going to eat pizza all day and work out once a month and run once a month all day, it won't help. So it's more about what you do every day, and as long as you're consistent, you'll be good. So yeah, 1 or 2 hours a day will get you really, really, really far ahead of a lot of others that just do nothing. What else? What else I want to talk about? Okay, let's talk a little bit actually about, this is cool actually to paint that. This is why I really like this. So how many of you are familiar with the, oops, let me see if I can paint that right. The cash flow quadrant by Robert Kiyosaki. So I don't know if you're familiar with it, but basically on the left here, oops, let me try to make that smaller so you can actually see something. So on the left side, you have E, which stands for employee. Then you have here S, which stands for self-employed. It's kind of like freelancers, etc. Here you have a business. And then you have investors. I stands for investor, right? So here's what's the normal path. The normal path look like for most people is they start as employees, then they say, hey, I don't want to be an employee, I don't want to have a job, let's start my thing, let's be a self-employed, right? A lot of people get stuck here. It's kind of like they become a one-man show business, and it's not really leveraged. Then some of them are able to, and again, 99% of people either stay stuck here or fail. I need to go back to employee. All right, those are just the stats. I'm not being pessimist. Those are just the stats out there. I'm just being realist. I think that it's like in the US, less than like 1% of businesses actually reach revenues of above 1 million a year. Those who do, they basically go to this quadrant, right? They become a business. And the difference between self-employed and a business, between the S quadrant and the B, is that in B, you have a team, you have systems, right? That's kind of like the biggest thing, difference. And then at some point, if you have enough capital and you can do that, you become an investor. And here, you can be a full-time investor, part-time investor, really depends. So that's kind of like the normal path of people, right? The beauty with acquisitions is that we pretty much go from outside this quadrant and go directly here. And right. And by the way, as investors, or you can also say directly here, it's pretty much depends on what you decide, because a business owner or investor, when you do acquisitions, you don't necessarily need to run the business yourself day to day. If you have the right business with the right cash flow, you can hire someone and pretty much be an investor from day one, right? If you buy the right business. Otherwise, the normal way of looking at this quadrant is that you got to have money to be an investor. But with acquisitions, what we basically tell you is, hey, you don't need to necessarily use your money. What we do, we use OPM. What it stands for, let me know in the chat. So what we do is we pretty much use OPM, which is other people's money. We go right away into here, right? And again, some of you might want to be the business owner themselves. And when I'm saying business owner, I mean you are the CEO, you're managing your team, you're taking care of accountability, of processes, etc., etc. which again, this is fulfilling, super fulfilling to be a business owner. But some of you might say, you know what, I want to step back, I want to be the investor and just be kind of like a deal maker. There's no right or wrong. It's kind of like, what do you want? At some point, if your business is big enough, you probably, there's only so much you could do of this. But again, look at some of the two richest people in the world. Look at Elon Musk and Jeff Bezos. They're still kind of like, obviously they are in, you can say that they're investors. They're going out there, they're buying companies, they're doing deals. But it looks like from what I've seen, both of them, Jeff Bezos kind of like took a step back. He actually just hired a CEO to replace him. But they really enjoy this because here's where a lot of the creativity comes into play. You're really involved. Like Elon Musk is like an engineer. He really likes that. It looks like the engineering, the design. But again, with acquisitions, you can jump here right away. You don't need to go through that path of being a self-employed first, starting from scratch, growing slowly, which is huge, 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 right? And there's leverage. We basically creating an economic status jump by doing that. So let's talk. Remember that we talked about the, let's talk about it. We said we're going to talk about what's going to happen before the deal. So now we're going to talk about acquisition. Let me know in the chat if you can, like, some of those thoughts are getting you at least a little bit excited about acquisitions, because I think it's important to have this framework of understanding, okay, why we even do acquisitions, right? And now we're going to talk about what's involved in each, right? So first of all, we have before. So let's go through some of that. So what's happening before acquisitions? What some of the things we're going to go through? So we got to go through the sector, right? How are we going to pick a sector? Which sector? Which country? You know, what size of business? Why and how we pick a specific sector, right? Those are some of the things. What else we want to talk about? What happens before? And let me know if you have some thoughts before. What happens before the deal, right? Team. I know a lot of people have questions about the team. Who do you need on your team? Do you need a team in the first place? Can you do everything on your own? Why and when having a team is good? What else happens before, right? You can say your thesis, your story, whatever you want to call it, right? How do you position yourself? Board, do you need a board? Credibility. How is someone going to look at you as a credible buyer? Because that's important, all right? Otherwise, people won't take you seriously. If you're going to talk to a business owner and they're not going to see you as someone credible, that's going to be potentially a challenge. How are you going to even position yourself? Like, how do you going to, like, what you're going to say to a business owner when you're going to meet him? Position. Yeah, I'm sorry. It's literally one of the first times I need to write stuff and talk at the same time, and apparently it's a bit weird. So forgive me here. Positioning. How do you position yourself when you talk to a business owner, right? What are you going to tell them? And again, we have people who came to us and are like, Moran, what do I tell those business owners? I worked in Uber before. I worked in McDonald's before. Some people are like, man, my business is huge. I'm going to approach that business owner. I don't want to tell them that I'm their next door business, the competitor, right? What do I tell them? How do I position myself? We're going to go through some of those things. So it's really, really important, right? Guys, can you see how important understanding those things is before you even approach business owners? Like, it's crucial. You want to have those things in play. Otherwise, you can like just burn yourself when you're gonna go through those things. Let's go a little bit on what happens during, right? So during, and I'm writing beautifully with the mouse apparently. Gotta work on that. I'm gonna put in my to-do list, buy a pen that I can write with. It's gonna be much better. Right, so what happens during, right? This is kind of like what I think about things like deal flow, right? Where do you find deals? Do you go direct, on market, off market? What about technology? Do you need any technology, or things like CRM? Do you use any CRM? Things like that. That's something to think about during. What about filtering, right? Like, what are you going to do to filter the deal, right? If it's a good deal, a motivated seller, not motivated seller, is someone you're worth wasting time on. You got to have some clarity on that, right? What about, you can call it underwriting or analysis of deals. Like, what's your plan and process there? How do you even know what is a deal, what is a good deal or not? Do you have a process in play? Do you know what kind of numbers you want to pay for a business? What's the maximum you're willing to go on a deal? What's the minimum you're willing to go on a deal? Do you have those things in mind? Financing, what's your plan there? Right. And again, we're going to go through a lot of those things. Do you have a plan there? You know, what you're going to do? You're going to put your own money. You're going to raise everything from other people's money. Is it going to be debt, equity? What other deal structures do you have in mind and know that you can bring to the table? Right? Why you even do that? Like, a lot of people, it's funny. We have people we work with, we have a lot of money in their bank. And I'm like, dude, just put some of your money. You know, you can put some of your money. It's okay. Especially if it's sitting in cash or something, because you can get great returns. And sometimes people are too attached to like other people's money. And again, I understand if you don't have anything, it's your first deal, and you're kind of like, okay, I need to be a business owner. I don't have any money to put. That's okay. But if you have some money, use it, right? Simple things like that I think before you have clarity, it's just going to confuse you. You're going to hear some stuff all over the place. Someone's going to tell you to do this. Someone's going to tell you to do only use other people's money. Someone's going to tell you to do only seller financing. Someone's going to tell you only to use asset-based lenders. Someone's going to tell you to only use advisors on success fee. There's so many words and things out there that can really overwhelm you. But I think it's important to go through some of the things to start to get some clarity with yourself on what is important to you, right? Like, how do you want to look at things? What is really important to you? Is it important to you to close the deal and say that you use advisories on success fee, or is it important to you to buy the business and actually make money and have the lifestyle that you want, the income that you want, the impact that you want? Right. And I'm sharing with you because I see too many people are like, man, I need to, have a board. Without board, I'm not buying this business. And they just spend a year to build a board without ever talking to a business owner. Or they're saying, man, I need to close this business. I'm about to close the deal, but the lawyer asked me for $5,000 deposit. No way I'm going to do that, man. I'm only doing deals on success fee. When they have a business that's going to bring them like multiple six figures in net profit each year as soon as they close the deal. So I think it's important to bring it to the table to, have focus on what's important. Is it important for you to say, I close a deal with a successful lawyer, or is it important to say, hey, dude, I run this business. It's bringing me X amount of dollars each year, which is allowing me to get this goal. And that's why I started with what are your even goals in this space to begin with? Is it income, lifestyle, impact? Why, how, when? Crucial, guys, to have some thoughts on those things. And I think one of the biggest problems we have in life is we just don't have clarity on what we really want. So I think it's important to go through those things. What else? What are some of the capital structures you have in mind, right? A lot of you guys probably heard about like seller financing structure, right? If it's the only structure that you know how to bring to the table in negotiation, then that's the only structure you're going to know how to bring to the table in negotiation. That's going to limit you. Right? Bring us to negotiations. What's your strategy here? Are you thinking, I'm going to kill and destroy everyone around me and do whatever I can to get the best deal for me? Or I'm going to try to find a win-win, or I'm going to find a balance? What's your strategy? What's your clarity? What's your path? All right, we're going to explore some of those things later today, but I want you to start to think about those things. Like, what is important to you? What are your values? How do you want to handle things when you're going to have some of those situations and scenarios? Because it's important. Maybe you don't think about those things too much, but after that, you'll regret, you'll miss some things, you'll skip deals because you didn't have, the right strategies on capital structure that you can bring to the table. And all you knew was seller financing, or all you knew was deal flow, just one way to find deals, which again limits you. Offers. Do you know how to make offers? Which kind of like similar, right? Capital structures. Do you know what kind of offers you can make, how to make offers, how to analyze deals in the first place? Who's going to make the first offer? What happens if the seller rejects you? You can bring in due diligence, I guess, during that phase. Right? I hope that's giving you some clarity, guys, on some of the things that are important to think about before you even go through kind of like this process of looking at deals. Let's talk a little about post deal, right? So that's kind of like we had the before, during. Let's talk a little about post. Right, so what that looks like. Let's think together. What happens after we buy the business? So, did you think about transition period? Transition, right? What's going to happen with the business owner? Why it's that even important to have a transition period, right? Who's going to be in the transition period? The owner, the seller? How long are you going to stay? What's the process going to look like with him? Who's going to be involved, responsible for what? Is the payment structure, the acquisition purchase price, is that part of the transition period as well, with some kind of earnouts or some bonuses that are related to the business performance? Like, what's your plan there? Do you have in mind what's important? Do you know how to operate the business? Let's talk about operations. Do you have any idea who's going to operate the business? Do you know if and how you incentivize the operators, or you're going to operate the business? And if you're going to operate the business, do you have someone who's going to train you? Is the seller going to train you on that? All right, what's your plan there? What else? HR. What's your plan of hiring people in the first place? Are you going to promote from within? Are you going to hire from outside? Are you going to incentivize people somehow? Are you planning on bolt-on acquisitions, or you just want to keep that business and grow it organically forever? If so, what's your plan there? Right. So let's bring in, I guess, things like sales, marketing. Right. How are you going to hire and fire people? Is it going to be your role? Is it going to have someone else who's doing that? Right. So you can say everything org chart, basically, which is the organizational chart of the business. Finance. How are you going to make sure you have enough capital to play with? Right. Working capital, things like that. Obviously things like taxes come into play, working capital, right? Those things, a lot of people don't even think about those things, right? And those are probably more important sometimes than closing the deal, right? What you're going to do with the business? How much money it's going to make you? What's your goal with the business? Do you want to run the business? Or you want to sit all day on the beach and get reports from your team? And again, there's no right or wrong, but what is it for you? Do you have some clarity on that? Yeah, different agreements, right? Shareholder agreements. I'm just looking at the chat and seeing if there's something that cool. So hopefully that's helpful, guys. It's just really important. Let's talk a little bit about, kind of like clarity, and how are we going to call it? Let's call it mindsets. Oh man, I'm going to buy myself a present, a nice pen that I can write with, and not this mouth. So let's think about this, right? Why now? That's something I think is important for all of you to start to think about. Why now? Why acquisitions now is important to you? Like, what you're going to do with it? Why acquisitions? What is your goal? What you're trying to achieve? Is it freedom, wealth? You want to buy a nice house? You want to help your parents? You want to create an impact and help your community? And I'd love to see some of those answers, actually. What I found out is that most people eventually, when they ask themselves enough time why they're doing something, it comes down to supporting someone specific or a community, and it's really good to see that. And I think when you're getting clarity on that, you'll really have enough motivation to wake up in the morning and actually do the work needed to avoid distractions, to avoid the self-sabotage that I think a lot of people have, right? Why you? Start to ask yourself, like, why you? Why you are the person to do that? If not you, who's going to do that? Who's going to have that impact? Who's going to have those results? Who's going to have, the story, the life story that you can have and no one else can? I think it's important to think with yourself, why now? Why you? Why it's important to you? Things like, why this sector in the first place? Do you have an idea, or do you care about the sector, or if that sector, do you have a big enough motivation on why you want to get yourself in this sector? Why acquisition, or why this acquisition, right? Remember some of the things we went through above? Like, are you looking at those things? Why this acquisition? What's the transition period? Who's going to be in the operation? Who's going to run the business? Who's going to handle sales, marketing, support? Right? Do you have some answers to that? Right. So maybe let's go through some of the biggest questions that we're going to go through today, and I'll write it down. So biggest questions. That stands for Q for questions. Because I'm not going to write here questions now. So let's think about some of the biggest questions I'm getting and see if we can answer as many of those today. So I think what I hear a lot is sector. What sector should I pick? Right? Who should be on my team? How do I find deals? How do I analyze the deal? How do I negotiate on a deal? How do I finance the deal? How do I close on a deal? How do I pay? How do I get paid? So how do I pay other people, advisors or employees or whatnot? How do I get paid as a business owner? Protection, how I'm protecting myself, right? What are the risks? What is the downside? Operation that we mentioned, who's going to operate? How's we going to operate? Yeah. Did I miss anything? Not sure. I don't think so. So let's kind of like start with some of them and see where that takes us. I'm just going to roll with it. So let's start with deals, because I think that's something that's probably interesting to everyone. So let's start with deals. You can call it deal flow. Yeah, let's do deal F, right? Stands for deal flow. So how are we going to find deals? What's your plan? What do you have in mind? Where do you think we find those deals? Let me see the chat. Do you have a plan to find those deals? Do you know what are the options to find deals? Just going to go through the chat and see if there's something that everyone's, maybe we have something that I want to go through if I see too many things at the same topic. Oh, wow, I see a lot of chats here. Okay, cool. I see some notes. Cool. So brokers, cold calling. Cool. I'm stuck at finding deals, broker. Cool. So what are the options? Let's think about it. Off-market cold calling. Cool. So yeah, let's write some of them. So definitely get brokers. You said cold calling. Oops. Come on, computer. What else we got? LinkedIn or social media in general, other platforms, websites, personal network. What else, guys? Email, events, masterminds. The roll-up that I'm going to talk about, I'll see how much time I have about that. By the way, he found all of these deals from different masterminds. He basically built $1 billion company in less than a year, all from masterminds. Lists that we can buy, rent, or pay for. What do you think about lawyers? Can we go for lawyers? Come on, why it's not? Lawyers. I see door knocking. What about suppliers? Can we go to suppliers and ask them? Different type of suppliers. Can we go to, there's a lot of sites, I don't know if you heard, like Dun & Bradstreet, like Info USA, like different distributors, like, did I write events? Yeah, I write events. Like accountants, can we go to accountants and ask them? Can we build list ourselves, build a list, right? Just going out there and kind of like going through different websites. Can we go through just Google and find companies that we want? Can we go to Maps, Google Maps, right? Google Maps, and find companies we want? What about different institutions like private equity firms, like venture capital firms, VCs? Some of you have BNI in your area. What about retirement professionals? Right? Can we go through some of those? I don't know if some of you are familiar with Upwork. Can you go on Upwork and find someone to get you? Can you go and use Facebook groups or LinkedIn groups? Right? Can you go and talk to wealth advisors? What about accelerators? Did I give you some room to think about here a little bit? Right? A lot of places we can go and start to think about where can we find those deals. Clarity. Are you clear? What's your path? What is masterminds? There's a lot of sectors where you can pay to be part of a mastermind, pay or be invited sometimes to be part of a mastermind of different, usually business, depending on the masterminds, but it can be, I was part of different masterminds of business owners that were basically all run businesses in the same sector. So, sometimes you need to pay to join those masterminds, but it brings you access to sometimes hundreds of people that all run businesses in the same sector. And guess what you can do when you're in a mastermind like that? You can ask them to sell their business to you, if they're interested, of course, right? And you'll find out that eventually every business owner will be open to talk about selling his business. Your goal as the entrepreneur potential going to buy him is to figure out if the price and terms are something that makes sense to you and obviously for him. So how are we going to reach out to those people, right? So let's talk about that. So I think the way to describe that is outbound. Right? We need to create some kind of an outbound campaign, basically. Oh man, I'm gotta work on my painting skill in this app. So let's talk about I think the different levels. There's probably I would say 3 levels of outbound messages. How are we going to call them? So we have what we call mass messages. Right? Mass messages are, we have one script and we just bombard everyone with the same script, right? It can be thousands of people, just send everyone the same message. So that's kind of like the mass messages. Then you can say you have the targeted messages. And after that, I'll put the nurturing messages. All right, so targeted is, so again, mass, are we clear? It's basically going out there, get access to a huge list and send sometimes thousands of messages or whatever we want to all of them, and kind of like, pray and spray and pray and see what we get. Targeted messages are, you can say, more personalized, right? So it's finding specific companies that we really like specifically and creating ideally a personalized message that show the business owner, hey, look, like we actually did the research and here's why we reach out to you, and would you be open to a conversation? Nurturing is probably not at the same level. We should probably do something like that. Nurturing is where you stay in touch. So maybe not the best description of art here, but nurturing for me is, okay, you found a company that you either found through this or this. And nurturing is creating some kind of a campaign that reached out to them on a regular basis, ideally with some value and sometimes with just a check-in to figure out, where they at in the process. And you'll find out mass messages. That's when people start to call you a scammer and a spammer. And I've had that, unfortunately. Targeted messages. If you really want to protect your name, do this only. And nurturing, I would say, if you have the ability and you have the skill and know-how, always have some kind of a nurturing practice, especially if you understand technology and CRMs and processes. Like that's what we really suggest all of our network to use some kind of a CRM. And here's the thing, I had a screenshot before that I remember I used to share of a seller that got back to me after 2 years of messaging him. After 2 years, it's like, hey man, cool. Like you were nice. You stayed in touch with me every 2 months, checking in, adding value. What's up? Like I might be interested about selling my business now. Are you still in the market looking for businesses like mine? And you never know. You just never know when they'll be open to sell their business. You never know when they'll, you know, come back from a weekend with their family and kids and are like, you know what? I don't want to go to the office on Monday. I just don't. And guess who they're going to think about then? They're going to think about you if you stayed in touch with them enough, right? So have that in mind. I think it's really, really important to understand the different level of messaging and level of outbound, and thinking to yourself, what is the way that you want to pursue in your path of looking for deals? Because, and again, I'm sharing that unfortunately with some of my experience. Like we're doing less of that, but I used to do a lot of this in the past, a lot of the mass messaging, and you know, some might say it hurted my reputation as well. But you know, it just, I was more young, more stupid, and I just care about bringing responses. So you know, you'll need to learn to live with that. Another thing that actually we did after that is like if you want to go through a mass messaging, here's what I suggest. I think it's a cool tip that we did in the past is have some kind of a third party company to represent you in that mass messaging, and then it's not necessarily directly your name. It can be a company that you reach out to, or your shell offshore representation, or whatever you want to create and how far you want to take it. But there's some, we can expand on that as well at some point. Let's talk about the next, I think, really important thing that a lot of people are thinking about is, let's see how positioning. Let's keep it here. Otherwise, it's going to take me another year to write all of this positioning. All right. All right, we got it. So positioning. How are you going to position yourself? So a few ways to look at it as well. All right, let's think about it. So you can have the personal brand investor type, right? That's a way. Go out there, position yourself, say, hey, I'm an investor, I'm a personal brand, whatever is it for you. I'm here to invest myself personally in your company. Are you interested in selling your business, or would you be interested in bringing in an investor, or would you bring interested in whatever, just working with me on a personal level, with me as the sponsor, the entrepreneur, the investor, the partner, right? So that's one way. The other way is, let's call it niche, or niched company, if it's even a good English, I don't know. But basically position yourself as a company that's very niched, right? Saying, for example, because we started today with marketing tracking, I'm a marketing, or I'm a tracking company, whatever, again, whatever your sector is, obviously, right? Saying, hey, I'm a marketing company and I'm looking to grow my business by acquisitions. Are you interested in whatever? And again, there's a lot of way to approach that. Are you interested in a joint venture? Are you interested in selling? Are you interested in receiving an investment, right? There's a lot of way to approach it that you need to think about, what is the right way for you. And there's a lot of conversations that we can have later. Do you need a website? When you need a website? What kind of website? What kind of emails to use, if any? How to structure yourself as a potential entrepreneur, investor, acquisition entrepreneur in the first place. So that's one, that's two. I'd say there's probably a third one as well. call it conglomerate or holding company or whatever you want. And this can be just more generic, right? So I would say niche company is just specific, focus on one sector. Conglomerate can be like, okay, we're just a conglomerate holding company. We're just looking to buy whatever. And then you're not necessarily need to be as sector specific. I think it's really important to understand what is it for you, what's right for you, based on kind of like who you are, what's your background, what's your experience, how you're going to feel comfortable positioning yourself. Yeah, I think keeping that in mind is really important, because all those things will affect if and how credible you're going to look like when you're going to talk to business owners, brokers, investors, or whatnot. Next one. I think it's also important to add on, how are we going to call that? It's kind of like what's required in positioning. Let's not have a title for that. Let's just put something like this and have something like, here's some of the things I think are super important. Certainty. How are you going to have certainty in your positioning? And what's your process to have that certainty? When you're going to meet, when you're going to talk, when you're going to send your first message or have your first call. Do you have the skills, right? Do you have the scripts, the words to use, the know-how, how to even talk to people, or how to describe yourself or and your opportunity? So I think having skills is important. Experience. What's your experience, and how you're going to position your experience, if any, right? And again, like I like to say, I don't care what's your experience, even if your only experience is working for whatever, Uber, you should come up with something that will describe that experience as the best experience ever. You know, you work at Uber, go to business owners and say, yeah, my background is in transportation, and I'm going to use that background to buy businesses like yours. Right? You got to have a way to position your experience as something positive. You got to have certainty behind it. You got to have the skills to do that and know how to use what words and when. I guess you can bring in background here as well. Like, what's your background, right? How are you going to share your background with the people you're going to talk to? Because people are going to ask you. How are you going to position yourself as someone who potentially going to be the most credible opportunity for each of the individual you're going to bring to the table? Contacts, right? Who do you have in your contacts? And based on those things, all those things will also determine how you're going to position yourself in the first place. If it's through a personal brand, niche company, or conglomerate. So who are in your contacts? Do you have any contacts? If you don't, cool. What's your process of eliminating the need of having contacts, which is all good. Like I said, guys, we had a guy, I swear to God, when I saw that story, I was surprised. I was like, the guy is in his 20s, is just got married and have a little kid, living in Ukraine, Nigerian guy, bought a multi-million-dollar in the business in the US. Like, you can't get any worse start than that. Oh, and his background is playing music. Like, that's what he did for a living, playing in like a, what do you call it, like a conservaton or something. Like, just imagine that he's talking to business owners and then telling him, dude, are you like a Nigerian prince scam, telling me to send me all of your money? Like, I swear to God, to that extent, it's insane. And that guy, and we have a full interview with him for like 40 minutes, describing his process, everything he did. Like, I heard that, I remember I was shocked with some of the results. I was like, okay, dude, I'm done. Like, it can't get any worse than that, and you did it. Like, congrats. Like, seriously, taking my hat off. It's like insane. Like, how can you get lower starting point than that? Like, you just can't. Insane. And the dude couldn't even get a visa to go to the US to close the deal. And no money down deal. No money down. He didn't put anything, $1 of his own pocket, nothing, nada, garnished, zero. Insane. So we have those people. Then we have people like the guy, Michael, that I'm going to share with you, who just is about to finalize a roll-up of 16 companies totaling $62 million in EBITDA in less than a year. Insane. Insane. Like I said, public companies in that sector, I'm not going to share it because he asked me not to share too much details on that. And we're going to try to help him go public with it. Public companies in his sector are being traded at 32 times multiples of EBITDA, around 30, 32. That's almost $2 billion company in less than a year that he built. It's just ridiculous. Again, it's not public yet, but I'm saying hopefully we'll be able to be that that entity that helps him go public, either directly with an entity or potentially with a SPAC that I'm talking to some people. But again, I don't want to go too much into that to overwhelm you. What else you need? Passion. What is your passion? How are you going to position your passion? I think it's super important. Curiosity. What's your curiosity? I think when a lot of people ask me about the best sector, I ask them, what are you curious about? What would you be willing to research for 20 hours a day for the next 20 years, right? I'm exaggerating, of course, but if you have an answer for that, that's a good, a good place to start with. Just taking some mint here so my mouth won't be too dry. Hopefully that's helpful, guys. I think some of that clarity is sometimes more important than anything, like seriously. Let's talk about the sellers a little bit, right? What you're looking at sellers, and give me some feedback in the chat if you like it so far, guys. It'd be really, really cool to see. Or if you have some thoughts or questions or feedback. Next, let's talk about levels. So let's call it L of motivations. Oh man, I gotta buy a pen. Where is Martin from my team? Martin, tell me, where can I buy a pen that I can write with like this on this software? I need to find an Apple store here or something if they have that. Level of motivation. L stands for level. So what that looks like, right? When we're going to talk to business owners, I think it's really, really important to go through that. Maybe I'll start and then we expand later if we have time. So there's a framework that I saw before that I really liked. So you have, right? Like, why would someone sell to you? That's what you need to start to think about. There's few levels. One of them is you told me to. Let's count the levels of motivations. You want me to. I want to. I have to. It makes a difference. So those are a level of motivation in general with people, right? But I think it's really, really, really cool to see that. And when you talk to business owners, start to think, where are you in your conversations? And where are you trying to lead to? And where is the seller to begin with when you're just starting the conversation with them? Because this is big, guys. Like, those are maybe too much nuanced stuff, but I think those are super, super important. Like, the more you can go down on that levels of motivation down to here, it makes a difference, the easier it's going to be for you. And what is your way of showing him that the way that you're going to do the deal and the reason that you're going to do the deal with him, going to do the deal with you, is going to bring more of that versus that. Just think about yourself. If someone's going to try to convince you to do something and tell me, dude, he's going to tell you, dude, you got to do that. And you're going to be like, why? You're going to be like, yeah, because I told you to. How are you going to respond to that versus if someone's going to have a conversation with you? And in the end of the conversation, you're going to find out, you know what? This makes a difference for me, for my family, for the community. It's subtle, guys, but this is huge. This is how deals are being done in a structure that is a win-win for everyone and is a huge win for you. Because if you can get the seller to a point where he's looking at you as the only opportunity and the only buyer that he wants to do deals with, it's going to make your life easy. versus if you feel like you're getting yourself into fights, And then let's add on that why. What's the reason they sell? Tell me in the chat, why do you think someone would sell his business, especially if it's a good, profitable? Like, I remember that was one of my first questions when I even got to this place. I was like, why would someone sell his business if it's a good business, bring him in money? Like, is it stupid or something? What's going on, right? So let me know in the chat. What do you think? Oh man, I gotta become better at my painting skills. This sucks. This is me with my mouth, yeah. What are some of the reasons, right? So I see some retirement, health reasons, wants to retire, lost motivation to do the hard work. Nice, sweet. Wants to move into another business. Cool. I love to see the notes coming from you, so it's not just my random ideas. No hers, loss making. Yeah. So let's write some of them. He made enough money already. Yep. And remember, again, it depends on the business, but a lot of them, especially now with the baby boomers, like I said, a lot of them are making tons of money, like sometimes recurring money, great cash flow, and they're selling the business. Wants to start a different venture. Yeah, so let's write it down, right? So we have retirement. We have things like health, retirement. Anyway, I'm gonna deal with my mistakes, guys. I'm sure you'll be fine. Health, relocation, right? That can be a reason. Burnout, partners issue. Anyone here ever had issues with partners, business partners, life partners? That sucks, right? That can make you want to leave the place. Unfortunately, some death situations. What about shiny object syndrome? For those of you who are entrepreneurs, I'm sure you have some of that as well. I know someone who used to have a lot of that. What about the economy? What about something maybe going on with the economy? We just happen, or perhaps still part of weird stuff going on in the economy. Right? Divorce, if you want to put it on a separate category. Right? What else? Yeah, maybe the business is losing money, but I don't suggest you to do, at least not your first deal as a loss-making business. I don't think it's a good way to start your journey. I saw too many. Let's just say that I got too many emails that are literally horror stories of people who bought distressed businesses. They just didn't know what to do with the business. Then finding out that I found out that they deployed some of their life savings, their family life savings, to save a business that isn't worth saving. So I would say, unless you have really good experience in that sector, just buy your first business that actually bringing money. It's going to take you the same amount of headache to just buy a good one instead. What else we have that we want to, right? What about, like, maybe they don't have anyone to, so I see, what about their kids? Maybe the kids, or maybe they don't have kids to take the business from them. Got enough money, not motivated anymore, right? Yeah, I see some lifestyle breath. Oops. Sorry, just that every time someone's joining the room, it looks like it's stopping my ability to click my keyboard for a second. I see in the chat, Amazon killing their business. Oh man, I had a few of those, how are we going to call it? Dependency, or like some weird thing that happens in the business, right? That they just can't control, and makes them say, like, you know what? I don't want to be part of this anymore. COVID or other stuff. Don't want to do the work anymore. Anyway, I think we got enough reasons here, guys. Hopefully, right? Uncertain about the future. Labor issues. Yep. Economy. Yeah. I see some great. We're buying a company now because of health issues. Exactly. So lots of different reasons, right? Hopefully you guys understand it. but I want you to see that there are enough reasons for someone to sell a really profitable, successful business. And that, I think one of the biggest things to take from this is the idea that understanding that when you buy a business, you sometimes doing a favor to the seller. Many times, I mean, you wouldn't sell it otherwise. And too many people that are reaching out to us, they don't understand that when you are out there, you know, basically solving problems. So really, really take that into consideration. So now let's talk a little bit about how do we pay? How? So that's probably one of the biggest questions people have, right? How do we pay for businesses? Let's talk about that a little bit. So let's start with kind of like the simple way of looking at it. I think the way that I see that is that I pay with skills, knowledge, and capital structures. I think that we pay by us loaning or something like, let's call it we loan, or how are we going to call it, raise capital against the acquisition target. And obviously loan can be also an equity, an equity raise. So just to simplify it, but let's maybe dive a bit deeper, right? Let's dive a bit more. So at this point, we probably have dozens. Where is my thing? Probably have. I don't want to promise, but let's put a line here and start to talk about some of the capital structures. Okay, I think it's going to be cool for you. So that's to simplify the version of how do we pay, right? We use skills, knowledge, capital. We loan, raise capital against the acquisition target, assets or equity. Let's talk about some of the structures, right? We have a roll-up. So like I said, Michael, the guy that I mentioned in the beginning, he did basically a 62 million EBITDA deal, around 180 million in less than a year. And the goal is IPO in a few months, in 6 to 12 months. So that's revenues. So, I mean, heck, if he's going to put a multiple of 30 on this is not a bad company to build within less than a year. And he did it with the roll-up options, let's call it roll-up options. We have one of our guy, Lyle, he did it with a rebate. So a rebate, and I'm not sure I'll expand on all of that. Maybe, you know what, let's take two or three structures and expand on them. So rebate is an opportunity to go to the acquisition target supplier and basically get a rebate is a deposit for the amount of time that that business worked with the supplier. And then you can use that to pay for the business. Pretty cool. So I think it's really important also, if we use other people money or, all right, so when we use, it's the wheel of doom. Let's do this. Let's keep with text. So let's just say this, right? Just maybe to put it on top. So when we use other people money, or I see too many people like the no money down deal thing, man, like I think we're all to be blamed with that. It's just really good for marketing. But it doesn't necessarily mean that all the deals we do no money down. Yes, we can do deals for $1 down. But in the end of the day, we are using money, but it's not necessarily coming from our own pocket, right? I think that's the biggest thing to understand. Like we're paying for those businesses really good money. but it's not necessarily our money. So I just want to make it clear. And I see I'm being spammed in the chat to repeat the rebate definition, so let me do that. Yeah, so rebate is basically a payment that you're getting from, and I'm just giving you an example of one deal and one structure with a rebate. So one of our clients, Lyle, he got a rebate, which is a payment that is getting from the acquisition target supplier. And the reason that he got that rebate payment from the supplier is because that supplier worked with the business that our clients bought for the last like 5 years. And especially with suppliers, he bought a business in the food sector. It's very common that the rebate is basically giving a discount retroactively for the fact that they worked with the business for a lot of time. And for that, our client Lyle also guaranteed to the supplier future work together. So what our client Lyle did is basically went to the supplier and guaranteed future work for him with the business that he's not owning yet, which is pretty cool, right? So that's a rebate. Let's talk a bit about more. So I'm not going to have time to expand on each today, but I think it's just cool to see some of those. So what we have, seller financing, you probably all heard about. What we can also do is liquidation of assets. We can also remove assets from deals or from balance sheets before deals. We can deal with receivables and finance against it, or remove it, or add it. Some deal are, you got real estate backed deals that you can lease or buy separately or remove from the deal, etc., etc. Equity, it can be an equity CEO or partner or supplier, or lots of those. What else I have in mind? One of our guys did a campaign test, which is pretty cool, which is kind of like doing a campaign with them before you even own. Inventory, there are a lot of things you can deal with, inventory out or in. Supplier financing that we mentioned a bit, but you can do it in different ways. Competitors financing. Oops. There are cool merchant ways of doing deals with merchant financing, angels, of course, hard lenders. There's what we call, I like to call it a CO drop, lines of credits. And that's some of the stuff we explore now, like reverse mergers or direct listings, IPOs. Revenue financing, earnouts, rev shares, consulting for equity, credit cards. See, I just mentioned like dozens of different ways where if you understand the nuance of them, like hopefully some of you guys probably heard the first time, like the rebate opportunity, really, really cool structure. That allows you to get access to capital that isn't yours. Oh, it's cool. The sun is going down. It's cool. You're going to see different backgrounds with me during the day. So hopefully, sorry, I'm losing my train of thoughts here. So hopefully it's giving you a bit of an idea of the fact that there's a lot of ways to get access to capital. So when you think about how do you pay for those businesses, the biggest thing for you to understand is when you have the right deal and you have the right structures, you can go out there and close deals and get access to capital that isn't necessarily yours. But if you understand how to position yourself, how to pitch yourself and the deal the right way, you can get access to the capital if you talk to the right partners, the right people, and you basically create the right capital structure. Probably worth going through seller financing for those of you just new for this space. But seller financing is basically the idea that you pay for a business a specific price, but you don't necessarily pay it upfront. you paid over time. And guess how you paid over time? You paid over time using the business cash flow to pay back the purchase price, right? And if the seller is motivated enough, you can do that. And it's freaking insane understanding that you can buy a business and you can pay for the business using the cash that that business producing, and you pay it over time in payments, basically, right? I mean, how more cool it can it get? There's a lot of different structures like earnouts, etc., where you can put in milestones in there, etc. A lot of cool tricks. We can talk about probably each of them for like 10 minutes or more. And yeah, we're gonna send the recordings when we finish. What's the time now? Oh, cool. We're like 2 hours in. Yeah, we're just getting started. Let's see where it goes today. Give me some thumbs up if you like it so far. Cool. All right. Let's talk about some stuff. All right. So let's talk about the roll-up IPO a bit. I want to expand on a bit of them because I know, at least for me, that's what I'm excited about right now. Because again, look at those numbers. I mean, I think the idea of what's possible here is just insane. So I want to get you guys excited. 3 a.m. in Australia and you're awake. Michael, I appreciate you. I appreciate you much now, a lot. So thank you. What do we want to talk about now? Let's talk about this. So what that looks like, obviously you gotta have a process in mind. You probably gotta have a sector in mind. And again, I'm just kind of like giving you the idea of what it looks like to pick one of those structures and when and how. Or let's just expand it from the place of kind of like this case study, right? So obviously he had the process in mind, he had a sector in mind that he picked. He really learned, or you got to learn the market really well. That's what he did. He had a great team. He had the right skills. He had a thesis in mind of what he wants and what is his goal. He had the right pitch of knowing how to pitch and when to pitch. He had the right deal flow, and I told you his main deal flow source was actually masterminds. And he also had a great goal and KPI, which I think is actually really, really important to put here. Like that was his KPI. He told me he had some EBITDA goals, and he actually kind of like almost tripled what he expected. But the reason that he was able to get to that is because he had a KPI that he tracked every week, and he kept himself accountable. So he told himself, I'm going to have X amount of conversations by X date, and I'm going to track myself every week to know that I had those conversations with X amount of unique conversations with unique business owners. That's how he got it done. And obviously he had the skills, he had the templates and agreements. He knew how to make offers. He knew how to analyze fast those deals, analyze. Right, so he had a lot of things in his recipe to make it work and get those insane results. He had the focus. What else was important there? So focus, definitely accountable, right? For himself, for his team, for everyone. He was okay with rejections because he got a lot of them. Like 95% of the sellers he talked to didn't do anything with him, but it didn't matter, right? That's big. So see if I can come up with another two, but I think it's really, really crucial to see some of the things that really made that work. Of course, he had the right capital structure in mind, deal structure. You even have an exit plan in mind, right? So I think those are kind of like a few things for you to think with yourself. Cool. What is it for you? Do you know what is it for you? Do you know why each of them is important, right? And if you, let's talk about actually some more stuff with this, because I think there's a lot of cool stuff I can expand on that. So he had his goal, he had his target EBITDA for the group, for himself and team. He had, I said, agreements and templates. How long is this meeting? As long as it takes. I don't know if you bored or you don't want that. I'll tell you my goodbyes. But yeah, I don't know. I don't know how long more it will take. We'll see. And the worst case, we'll send you the recordings if you want. I think we're going to send an email about that. So pay attention to your emails. He had a really cool risk reversal, which is basically the opportunity to almost unwind the deal if it didn't make sense. Yeah, the right positioning, the write it down, positioning, you have to position himself really well as a credible buyer, although he didn't have any experience in that sector. Positioning. He also had the idea of multiple arbitrage from the RB. Sorry, again, me writing and talking December. This is not how you say arbitrage. So he knew that he can get those businesses for 5x, and public companies in that sector are at around 30, 32x, which is pretty cool. And yes, I'm sorry if I didn't mention that, all of those things that I'm talking about, I don't care if you're in the UK, US, Canada, Australia, Singapore, Europe, we had deals in Colombia and Mexico and Poland and Lithuania, I think, and South Africa, US, of course, did I mention the US, UK, Canada, Australia, all of those countries. Like wherever you're at, probably some of the richest people in your world are doing deals, in your country are doing deals. So, you know, yeah, you have the accountability. I said that already, the support, ability to ask questions if stuck. I think all of those things are, we're kind of like not paying attention to them. Those are small. I don't know if you see them, you're like, oh man, that's too much, or man, that's, I don't know if it's important, but all those things, when you put them all together, that's how, you get this insane result. And when you're missing something, it sucks. So I think that's pretty cool to cover that. Let's move. What do we want to talk about right now? And I'm seeing post on the chat, and it will give me an idea for how I want to move next. But I want to talk a bit about operations now and growth. Oops, I can't see my operation. Oh man, my writing with the mouth is insane. Operations, and let's call it growth. I think I might be able to save this amazing document and send it to you after that if you want, so you can see those writings, those beautiful writings, even after that. Let's talk a little bit about the operation of the growth. So I think I don't see enough people talk about that, especially in this idea of acquisition. So how you want to look at it when you buy businesses, right? You have a few options. You can say you operate. Come on, keyboard. You operate. Keep the team. You can think about that. Let's add transition period. What else we got? We can say, call it partner with craftsman. Hire from outside, promote from within, right? What else we got? So just to expand a bit of each, right? Like, does it make sense? Like when you buy a business, like start to think like what that's going to look like for you. What do you want to do, right? Like, do you want to operate the business day to day? What's the upside and downside for that? Do you know? Do you want to keep the team there? Who do you want to keep in the team? Who is important in the team? What's that transition period going to look like? How long of a transition period do you need? Do you want to maybe partner with a craftsman? That's a really interesting, especially you see in some sectors like engineering, for example. You see business owners like in that space who run businesses for years, and then they're like, you know what? I don't want to deal with the business side of things. I just want to do my craft. I want to be an engineer. I don't want to do anything else. And they're looking for a partner that, looking for a partner that will basically deal with the business side of things, that will deal with the sales, the marketing, the operations, the HR, the finance, the legal. You don't want to do that. You just want to be an engineer and create cool products, for example. So I think this is something that a lot of people are not talking about. This is probably one of the motivations to sell a business as well, right? Hire from the outside, promote from within, potentially acquire to hire. All right, so you can always buy another company and merge with another company, so you can use their management team in play. A few ways to look at that, and I think we can discuss a lot about those things, but I think it's really important for you to understand that you gotta have those things in mind when you're thinking about the business you want to buy, right? What else? What else? Let's talk about downside a little bit. Tell me in the chat in the meantime, what do you think is, what can be the downside in a business? How do you think you should protect yourself, if at all, in an acquisition? Are you thinking about that on a downside? Do you care about the downside? Maybe you don't have anything to lose. Maybe you don't have much assets to lose. Maybe you have too much assets to lose, and that's what's holding you back from doing deals, because you're afraid. You're like, you know what, man, I don't want to lose everything that I built over the years. So what are some of the things that we can start to think about here? First of all, is there any downside, right? Can I fail at all? Do I have confidence at all to run the business? Maybe I'm too overconfident to run the business, right? It's a small business. Small business can fail, right? How to protect yourself? LLCs or different entities or trust. Are you thinking about those things, right? Or C Corp or whatever it is that you're LC, C Corp, trust. Like, are you thinking about some of those things? Let's call them asymmetric investment. Come on, Zoom thing. Investments, right? Which is maybe, how can you make sure that you have the least downside as possible, if no downside at all, and only upside? Or can you minimize the downside and still act on the deal, right? What's the upside? Are you thinking about the upside? All right, let me know in the chat. Are you thinking about some of those things at all? What is important, do you think? And again, some of you might say, you know what, I have nothing to lose. I don't care. Worst case, I'll be bankrupt. And especially in the US, I'll be back in a bit, and I'll try it again. But for those of you who have some assets to lose, you got to think about those things when you get yourself into a deal. I want to talk now about the 3 steps guaranteed formula for success in this space. All right. So, oops, what is this? So let's call it success. This is what I like to tell to our clients a lot of time for the guaranteed formula. Do you guys want to see the guaranteed formula for success in this space? Let's talk about that. And want to get a copyright or. So here's what I think you should start to think about. So let's talk to business owners, talk to financial partners, make offers. If you don't have a process to do each of those and you're not doing those on a weekly basis, you can expect to get results. Talk to business owners, talk to financial partners, make offers. If you're not doing one of those three things, or you didn't do any of those three things in the last weeks, months, as long as you're in the space of acquisitions, you probably didn't do any deal. Right? Simple. Let's talk about some more stuff. What I like to call the moment of truth. What is the moment of truth, you think? What am I talking about here? What I'm referring to in my mind is that when the seller ideally says, this is for me. Let's do it. All right, something like this. Let's do it. He's like, okay, let's do it. You know what? Cool. Let's do it. We're doing this. Boom. Let's do it. Draft the agreements. Let's go. How do we get that? How do we get to a point where we talk to the seller and then the seller is like, you know what? Boom, let's do it. Here's what I think that you need to go through when you go, and this is talking a little bit about negotiations, right? So here's what I think you need to have in each conversation, in each negotiation phase, in each negotiation process. You need to go through those things. You need to go about what is the existing situation for the seller, what is the pain that he's going through or you might solve for him, why now is important for him to sell potentially, what's the vision that you have, what's the gap that you have to get to the vision, and then what's your solution, which is something like, here's how I think I can help, and you basically provide it. Unless you're going through those things with the seller, it's going to be very difficult to get to that moment of truth when he's telling you, cool, this is for me, let's do it. Right? Are you really diving in and you have a process to dive in with questions on what is existing situation now? Do you have a process of finding out what is the pain? Remember all the reasons we talked about? Where is it? The people selling their business? Damn, we went through a lot. Where is it? All those? What is your process to dive into the pain, the real pain here, of finding out why he's even doing that in the first place? Why now? You know, cool. He's getting divorced, but maybe that divorce is going to take time. So why now is important for him to do that? Like, what's the urgency? What's the vision? What is he going to do as soon as he sell the business? Right? And what's the gap to get there? Unless you have those things, it's very difficult to prescribe a solution for him on why you're going to be the best solution for him as the business owner. And you got to have a process in play, and you got to have a step-by-step interaction that ideally go through all of those. I'm going through a lot, guys. I hope I don't overwhelm you. What else? Let's go through some more stuff. What kind of questions you can get from the sellers? So you're going to have an interaction. You're going to ask some questions. What kind of questions are you going to be asked for? So you're definitely going to be asked about your process. You're definitely going to be asked for some kind of a proof that you can do that. And again, all of those, some of them can be verbally, some of them can be actually asking for materials from you. Some confusions that the seller is going to go through, some consequences. So good luck. Can you write in consequences when I'm talking? Let me shut up for a second so I can write it down. Some consequences. Worrying that he might have, right? Do you have a way to overcome those things, right? Those questions, those worries. Now let's talk about how to progress a deal. right? And again, guys, those are frameworks that I want to give you to really start to think about. Progress. So how do you move progress? So we went through some of those things, but let me kind of like walk you through the process of making a progress in general. So the way that I see that is, first of all, we qualify and filter motivation. Qualify and filter motivation. Then we need some thoughts about, we need to have some kind of a conversation or conversations and rapport, right? How are we building rapport? Why? If you're not building a rapport, I mean, forget about doing a deal, especially if you're going direct with a business owner, guys, you got to build rapport. Oversee pain and vision. You got to have something for that in mind. Meetings, obviously meetings, Zoom at this point. Zoom is amazing nowadays. Like deals are being done left and right on Zoom. Then you got to be able to access financials, right? What's your process here? What information you're going to get access to, etc., etc. Then let's talk a little bit about, in general, your process of deal flow. So I would say, how am I going to call it? Let's say deal flow. And then I'm going to call it something like evergreen versus sprints. I think it's important to talk about it. We mentioned that a few seconds ago, but I think it's important to talk about the differences, right? So the way that I see that, you can either go evergreen or sprints. And I told you what are my thoughts about sprints. It's like, I'm not sure it's the best way. You don't work out once a month and expect to be in the best shape of your life. But some of the things to think about in terms of deal flow, like how do you operate your calendar and time, right? Like what that looks like. Is it on your calendar? Do you have a specific time in the day, in the week to work on that? Is it consistent enough? Then what happens when you have deals under LOI? Deals under LOI. Do you know how to focus? Do you keep your deal flow or not? Are you focused on the deals that are under LOI so you can close the deal? Right? When to stop deal flow, if any? My answer would be never. Right? Obviously, if you're under LOI, it's different because you want to focus on actually closing something. But like one of the biggest struggles that I see for people is people who are thinking that they're going to close the deal and they stop working on all their deal flow, and they find themselves like devastated they didn't close the deal, and then they need to renew all their deal flow efforts, and it's just very difficult mentally if they stopped it. So think about that, and always keep in mind, again, what are your goals? Do you want to own a business, make money, impact, lifestyle, all of the above? Maybe your goals are just to get advisors on success fees, or get only deals at 1% seller financing, right? I don't know. What is it for you? What else, guys? And again, I'm going through a lot, guys. Let me see if I have a lot more to go through. I just want to see how we're doing with the time. So we're like, yeah, I can expand on each, but let's see. We'll roll with it. So how do you pay yourself? I know that I get that question a lot. Pay yourself. How do you do that? Do you even need to do that? That's probably one of the biggest questions you have, right? You're going to own a business. Cool. How do you get money? If you never had a business before, you're probably not sure about it. So let's talk about that a little bit. So a few ways. First of all is you can get paid potentially at closing if you raised enough money during ownership, right? When you own the business, you have payments at exit. But something to think about is how much money do you really need to pay yourself? I think something that I shared with our clients, I think it was in last week Q&A call, is, and again, I'm sharing that because it comes down to your goal. Like, what is your goal? Maybe your goal is to have a Ferrari, but I would say that, trying to find the words to use it, but let's just say that if you have big money goal and you're taking too much money out of the business to buy stupid shit, you're just gonna take you much more time to get your big money goal. And I see that happens a lot. A lot of people buy their first deal and they're like, man, I have an extra 100,000 here. Let's just take it out. Pay myself, pay tons of money on taxes on that, because you need to pay taxes. And let's buy a car, nice car, but after 2-3 times that you drive it, it's just another wheel, man. Again, unless you're really a freak of cars, which I'm not, but it's kind of like, if you really have a huge money goal, guys, just reinvest it back, potentially into more deals, right? Because remember that every $100,000 that you're taking out of the business is a potential $1 million business that you could have bought. Think about it this way, right? Please, if you're considering leverage, etc. So all I'm saying is just be smart with the money. Obviously, don't get me wrong, pay yourself enough, especially for those of you who want to replace your job. Pay yourself enough to replace your income, maybe a bit more, to give yourself a bit of a nice cushion to your lifestyle, have a good enough lifestyle. But I think that until you reach like some kind of a milestone that you need to decide with yourself, what's that milestone? Oh, man, I think buying stupid shit is just a waste of time and money, of course. You're just like, again, it's coming from someone that's learned some of those lessons in the hard way. Let's expand a little bit more on when you're buying the business from them. So why they're even giving you the business. So the way that I see that, kind of like, I'll say why seller. I think it's also a good framework to have. Is one, it's to make money. They sell, they just want to make money. Some of them just want to save money. Some of them want to get out of jail. And the other reason is to fulfill future self, right? So all of the reasons that we mentioned above, in the end of the day, that's what they really want. And I think having that in mind is really important. Understanding the deep desire, motivation behind all those things we mentioned, like the divorce, all those things, the health issues. Let's talk a little bit about objections that you're going to get from sellers. It's funny. Zoom objections. So what that looks like, let's talk about that a little bit. Or reasons why they're not selling. So the way that I see that, it's there is either not enough pain, right, for them to sell, some kind of a deep motivation that maybe they don't have it, or maybe you didn't find a way to find that. Another reason is they don't like your process. Maybe they don't like your solution, or I think the last one is they don't like or trust you. So you got to start thinking with yourself, like, what are you doing to, go through all of those things and make sure that you get them to feel more pain, that you ask the right questions to feel more pain, that you have the process lined up so it's smooth. They see you as a credible buyer. They see that you know what you do. You're not just, practicing on them. So they're confident with you. Your solutions to their issues, to their problems, you have clear solutions, and you have ways to build trust, rapport, with you. It's crucial. At the end of the day, we're in the business of people. It's the business of people and people. It's not business and business. I think that every business is people and people business. At the end of the day, every business problem is an HR problem. So what's your process to deal with those things? Think about it. I think those frameworks can really help you if you get some clarity on those things. And also, something that took me a lot of time to learn is kind of like the attitude of push versus pull. Or you can even call it power versus force. There's a cool book about it. Like, how are you reacting when someone's telling you no? Right? Are you reacting too bad, too emotionally? Do you have a follow-up process with a counter? Perhaps you put in some kind of a time limit. So you're saying like within X day or date that offer is relevant. Do you understand that follow-up can pretty much be done forever? And unless you really pissed off the seller, you can always come back to him. With updates, with checkups, with, can you send updates on your progress and get them excited a little bit more on your progress with your companies or your other acquisitions? Can you repeat the ask with same or different terms, right? What else we got here? Actually, let's expand on that a little bit, on the scarcity thing. I think it's something that, so scarcity. All right, so what can we do there? So things like offer applies till X date, or some could say that best scarcity is no scarcity because you have abundance, right? Abundance of deals, and you're not in a rush for any deal. I guess another way to look at it is the fact that sometimes momentum and speed on best deals is crucial too, and to not lose momentum on the best deals. There's a lot of ways to look at it, and I think having some of those frameworks in mind when you're looking at deals is really, really important. And you need to understand what is your process, how are you handling it, if and when you're starting to talk to business owners. Yeah. Yeah, I see how you're going deep. I like it. Yeah, I really, those are some of the kind of like thought process that I've been having, and I just wanted to expand it. So I think it's cool that I have this platform to kind of like share some of those thoughts. So yeah, thank you for being there, allowing me to share some of my thought process. Because I'm literally kind of like expanding it with you, and I think it's going to be super valuable to somebody to just see some of my thought process and looking at things and having different frameworks. Because I know there's questions that a lot of people have, right? How do I do this? How do I look at this? Why do I even this? What are some of the questions or procedures or options in each situation? So how do you make offers, right? So I believe, first of all, it's same side of the table versus kind of like win lose. Technically, a lot of ways to do it as well. Email, verbally, via meeting. It can be offline, online at this point. Can be, again, if you want to talk technically, it can be PDF, PowerPoints, some Google Doc even, right? And when you do the offers, of course, are you asking yourself, do I want it? I don't see too many people ask themselves that question. Do I even want that business? Is it going to bring me the money that I want? Is it going to help me with the goal, or at least taking me towards the goal? Maybe I don't care about the first deal. I just want to do the deal for the sake of doing the deal, even if it's not going to make me money, because I'm going to learn a lot. I'm going to get to know a lot of great people. Maybe that's there. So let's expand on that a little bit. So, or do you want to work with those people? So the way I see that, it's kind of like people. Do you like the people? Do you like the vibe? Maybe if you want to go a bit, like that. Can you help him, the seller? Can you help yourself with this deal? Any red flags? Right, things like numbers, customers, employees. Right? Are you looking at those things? Who will run the business? Can you finance it? Can you get a second point of view, or a second set of eyes on the deal? Right? Are you thinking about those things? Should I pay that much? Let's talk about some more, maybe even detailed stuff about kind of like valuations and stuff like that. So what's the growth potential for the business? What's the historic financial performance? What about recurring revenue? Do you have any? Some really important owner dependency. How dependent the business is on the owner? Is it easy to produce cash flow or not? What the margins looks like? What about quality of reports or numbers? How fast can you get those? Because here's the thing: when you're talking to a business owner and it takes 3 months to send you access to his financials, there's only two things there. It's either he's not motivated to sell you the business, or his numbers are in a big mess, like huge mess. Especially nowadays, guys. Like everyone's using like QuickBooks or Xero, whatever the softwares that they're using. They should give you numbers really fast. And if not, you need to think: is that a red flag? What is the moat for that business, right? Warren Buffett likes to talk about it a lot, right? How difficult it is to compete with that business or start a new business in similar business like that from scratch, right? Competitors. What about customer satisfaction? Are they happy? Do you know how to Fetish again, me writing down satisfaction. What that again? Sadis, whatever. You understand me? What about dependency on one supplier, customer, on the owner? All those things should be determined if and how much you want to pay for the business, and if you even want to deal with this business. What about the sector trend? Do you like where that goes? One of the reasons that you see Tesla has been valued at such a crazy multiple is the fact that everyone thinks that, we're not going to have any drivers in the future, and people think Tesla is going to be, there in the front. So what about the sector that you're looking at? You can say brand recognition, right? IP, mode, which is kind of whatever there as well. I'm renting here. I want to see if I can see some faces, just to see some reactions. How do you guys like it? I don't see a lot of faces. Yeah, you do, guys. Thank you. I appreciate it, guys. Arthur and Green. Everyone else is just hiding, hiding behind the. Oh, there you go. Now I see some. Turn on your cameras. Thank you, guys. I appreciate it. There you go. Thank you. All right, I'm going back to my screen. Just want to see some faces. Make sure that I'm not talking to myself, because I'm just looking at pretty much me and the whiteboard. All right, good stuff, guys. Thank you. I appreciate you all. Thank you. All right, let me go back to that. Where is it? Notability. Thank you. I appreciate it, guys. Notability. So I think you should be able to see my whiteboard again, right? Can you give me a thumbs up just real quick that you can see that? Yes, thank you. So what else? Let's talk about blocks, and especially, let's go woo a bit. Blocks. Blocks. And that's probably the most woo I'm going to get with you, but I think it's really important, because I think, including myself, everyone, like within life, those are some of the things that are holding us back. Like, there's a reason I think that I'm paying weekly for at least one therapist that I'm talking to. Like, I don't think I would be where I'm at right now. I don't think I'm looking at some of the biggest guys out there, like Bezos and Elon. I'm not even close to those guys. But I know that I would never be where I'm at right now, which is financially free, in my early 30s, without those therapists that I'm doing on a regular basis. And here are some of the things that I learned, I think, during that project, on why some people are taking action and are getting results and some not. So I think self-trust. People just don't trust themselves. I think self-love. I think worthiness. I think fear of failure. I think fear of success. Money story. Scarcity thinking. Imposter syndrome. Lack of focus. Uninspiring goals. And yeah, Georgie, if it's 2 hours discussion about nothing, you're welcome to leave, my friend. I'm not attached. I think that hopefully at some point you'll realize that we went more deep than you think in terms of the frameworks here. What do you mean money story? In terms of money story, I think that all of us here is, not here in general in life, we have a story that we are growing up with our parents. All of us are kind of like grown up with some stories that we have from our parents, usually, in the way that we're looking at money. And unless we work with that and heal that and take a perspective of an adult, I think it's I think it just runs us less. Like, the problem is that a lot of time we run our life like the kid we were, like at the age of 5 or 10, and we run our life with the same stories and traumas that we got back then, but it's still like in control of our life right now. And again, I'm not an expert too much about those things, but I know for me, I had to let go of a lot of those stories. Like, I didn't grow up with money. My parents divorced. In my mind, my story was that they divorced because of money. So one point is the fact that it gave me a lot of motivation to prove myself and make a lot of money, but not necessarily for the right reasons many times. So I think it's just good to have some of those, yeah, just understand those things. um and then I think the one thing to remember, guys, is that this is a process. Like, you gotta have patience. If you are with me right now for 2 hours, and I appreciate it, and you think you're gonna be a billionaire in a day, I'm sorry, this is not how life works. Like, this is difficult, guys. This is freaking difficult. And you need to have patience. And ideally, as weird as it sounds, you need to fall in love with the process. You need to fall in love with the process. You need to build habits. So I would say, few things to remember, guys. This is a process. This is not a get rich quick. You know, ideally, learn how to fall in love with the process. Ideally, focus on habits and not just goals versus just goals. You know, ideally, focused on values versus feelings. And those are, again, frameworks that I try to live my life with. And they might look very, kind of like on the surface type things, but this can go deep, guys. Like, just to give you an idea, I mean, if all you have is goals, but you don't have habits to, to kind of like cover your big goals, you won't achieve those goals. Like, if you have a goal to, and again, I like to always think about the getting in shape thing because it's the easiest metaphor to think about. Like, if you want to stay in shape, but you don't have a diet and a workout routine that is super allowing for you to eventually achieve your goals, you won't achieve your goals. And I think this is what usually hold us back, is the fact that we're living our day to day, a lot of us, unless we're aware of that, from our feelings and not from our values. So guess what? If health is important to you and you don't have a habit of working out and good diet, you won't really achieve the health or the results that you want. If wealth is important to you and you don't have some kind of a daily habit to achieve um, the wealth that you won't get there. And wealth can go, different ways. So can be passive investment, can be, again, everyone here is in a different situation, but assuming that we're talking about acquisitions right now, right? If your goal is to build wealth with acquisitions and you don't have a process to talk to business owners, talk to financial partners, make offers on a regular basis, and ideally get feedback on that and have the right process, it's going to be very difficult for you to make acquisitions and build wealth. And the problem is that a lot of us, unless we are aware of that, wake up and live by emotions. And if we don't feel like it, we don't do that. And what you need to understand is that when you have goals that you want to achieve and you really want to do those, you're not going to wake up and feel amazing every day. Life going to suck emotionally. And that's something you'll need to deal with probably, again, I'm not the expert on that. You'll need to deal with therapists and whatnot to heal that and let it go. But it's a different thing to focus on than your goals. Your goals, you should be like a robot. you should be like a freaking robot if you have goals. Yeah, you should be like, okay, I want this. Cool. What are the habits I need to have every single day? You either do them or you don't. And if you didn't do them, then fuck off. You don't deserve your goals. You know? And it might sound harsh, but you know, it's coming from, I'm telling you that from the heart, like, you know. And if you just want to feel good, it's got nothing to do with achieving, in my opinion, achieving a lot of the goals. Like, you know, sometimes shit that we do suck. So, and I think that you still need to work on feeling good at the same time, but that's a different work than working on your, at least in this case, like financial goals or health goals, which I think are, yeah. So let's talk about that then. So what do you need to succeed? I think that, so what do you need? What? This is me writing what. So here's what you need. I think you need the right info and method. I think you need the right strategy at the right time. Because sometimes you learn about a strategy, but it's not the right time for you. I know for some of you here, you might learn about acquisitions right now in the first place, in the first time, and it might be too early. For some of you, like, man, I wish I had learned about it 10 years ago, right? It's like, damn, dude, this is, I learned about it late. It's like, what's going on? I need to run on. I need to move on. I think you need to have a feedback loop to be successful as well. I think because all of us are like 3-5 decisions away from success. I think that whatever we do in life, like a small change in the way that you do things can really, like, and again, this is not me inventing, but like one small change in like a small percentage can end up in a very different way in the end. And whenever you have a feedback loop, you know, in the right way, can really, really make you end up things in a very different place. I think you need a community, and I think one of the best thing you can do and have is have people with you that are on the same journey, and it will help you understand that you're not alone in this, because being an entrepreneur is can be a very lonely journey. There's a reason that I paid at this point multiple 7 figures probably in different masterminds and people that I was able to meet, you know, because otherwise it's not easy, man. It's really not easy. I think accountability is crucial. If you don't have accountability, you know, someone who can help you be like, dude, you got to do this. Not you got to do this. I don't think no one should ever motivate you. If you don't have the motivation to do that, dude, just give up. Don't do that. But I think when you have the motivation and you're deciding that it's this important to you, I think it's really helpful when you have someone like once a week or once a month or once a quarter who are like just checking up with you and be like, dude, what's up? How are you doing with this? Are you doing this? Are you doing that? Did you take a bit left, a bit right? I think it's really, really helpful. Mentorship and coaching, like if you're taking action, I think it's very different than accountability. But I think when you're taking the action and you don't have the confidence and anticipation of what to do next because you didn't do it yet already, you didn't do it yet in your life, I think having someone who's been there, done that is crucial. And I'm telling you that because at this point we helped in more than 100 acquisitions. Again, some of them like that I did directly or indirectly with our clients. And I see with the questions that we're getting how sometimes it's less about the content that someone is missing. It's more about the certainty in the answer that they probably heard about before already. But when they got it from someone who's credible and they got it with certainty, they can then pursue with certainty towards the next step. and it's really, really important. I think all of us need mindset work constantly. And again, there's a lot of ways. I found out that I have cycles of things that I do, different things, different methodologies or daily habits. But I think you got to have some mindset work that you're doing on a regular basis to keep yourself in line and focused. And again, I can dive in deep more on what those things looks like, but I think some of you understand, like everyone got to have some daily ritual to get yourself back into the right state. And support, of course, if you're getting stuck and whatnot. So yeah, I can, I will, I must. Exactly. It's true, man. So I just want to see what we got here. I think we covered, in my opinion, a lot of good stuff. Damn, there's a lot of pages here, man. So probably talk about it, acquisitions forever, but I'll probably give you guys a break. So, whoa, man, yeah, we got covered some stuff here. I'll try to do more of those workshops. I think it's pretty cool. It's giving me an opportunity to share my thoughts. But let's talk about next steps then. So first of all, tomorrow we're going to do a Q&A call for VIPs. We're going to send an email about that. If you want to work with us, if you need help with this to implement some of the things that we went through today, yeah, I want to invite you to work with us. So if you will allow me, I'll put in the chat a link, or Martin, if you can put, if you're around here and you could put the link to the intake form that we have. I would really like to know you first. There's an intake form where you can answer a lot of questions that I would personally check them out myself. And yeah, and then I'll reach out if I feel like we can help you. This is for you if you want the freedom, I think, freedom of income, lifestyle, impact, or all of the above. I think that lifestyle is possible for all of you with just one deal. Like the lifestyle you want, guys. Again, I really think there's not, like, I've had the crazy lifestyle. I don't think you really need more than like 300,000 a year to live from to have a great lifestyle. I'm talking like 0.1% wealthiest person lifestyle. If you're spending like 300,000 a year or 350, let's say something like that, 360, like 30,000 a month, you can live like a king. And one deal can easily get you there. And I'm not even talking about the capital event you can have in an exit, which is 7, multiple 7, and even higher numbers, of course. So that's in terms of lifestyle. If lifestyle is important to you, then income, guys, there's no limits. The richest people in the world, that's what they do. They do deals, they buy businesses. And impact, the communities that you're going to help, the employees that you're going to save their jobs, the sellers that you're going to help retire in a safe way, I think is beautiful. So we're going to put an intake form in the chat right now. And for those of you already, let's see if we can find the link. 1 second. Let me see where it is. All right. So yeah, if you feel like you want to work with us, you'll fill the application. Then we're going to send you. If I really feel like we can help you, I'll send you all the details of what it looks like. But for now, it's just go to the application, to the intake form. Just fill your details. Answer as honest as you can. It just pretty much me and maybe another team member are going to see the answers, so you can be as open as possible. And yeah, I don't know if some of you guys, we didn't really share too many of the testimonials because I didn't want to. I wanted to just go through some content. We have at this point dozens and dozens of No, no, Angela, that's not the, oh, okay, that's the link. Yeah, acquisitions.com/enrollment. You got it. So the link is in the chat. We have dozens and dozens of testimonials at this point of people who bought multi-seven-figure deals using little to none of their own money. And I wish I had the time to share with you all the stories. Like, seriously, it's insane. We have at this point 100+ testimonials of some of them screenshots, some of them like full 30-40 minutes interviews. Some of you are on our email list, probably saw some of them already because we shared some of them. But I really, really recommend it for you to go to the link right now, apply for the program. Let me get in touch with you if I feel like we can help. I'll send you all the details of what it looks like to work with us. I really believe that this can change your life because it changed mine. And I really believe that if you can and will be committed to this, it will change your life. And hopefully you saw today like the level of debt that I think we are at right now with this. And the reason we are going so deep is because this space is exciting. It's literally, there's no limits to the places you can go. And I just wish you all to, like my goal, like I like to tell to our clients, my goal is that each and every one of you will do your first deal as soon as possible. Will reach a point where you have the income that you want as soon as possible and the net worth that you want as soon as possible. And then you'll be like, holy shit, I have the money that I want. Now I'm bored. What am I doing? And then you'll be like, you know what? I want to do more deals. Those are the people that I want to work with every single day to build companies like WPP and XPO, like multi-billion-dollar company that we can help grow by acquisitions and go public. And that will be really, really amazing for me if we could, find some of you guys who are now on the call with us and build those great companies together. So with me as your mentor, guide, investor, all of the above. So again, we're going to end on this note. If you're not working with us already, because I know some of you here are already clients of ours. Thank you. I appreciate it. Thank you, Bernard. So for those of you already clients, no reason to apply because you're already a client. So you get everything. But for those of you who are not yet and want to look what it likes to work with us, again, the link is in the chat. It's acquisitions.com/enrollment. It's just an intake form for you to put your information. And yeah, as soon as we get them, we'll be in touch. Tomorrow Q&A. And that's it. Hopefully you enjoy that. We're going to put the recording probably in an email. We're going to send it to you. I had a great time presenting that. Thank you for allowing me to be in a flow, because I feel like when I talk to a group of people, I'm in flow. And it's probably one of the biggest gifts that a person can get to a point where he's doing something for the sake of doing it and is feeling alive when he's doing that, right? I don't think happiness is the right word, but it's feeling alive. And thank you for allowing me that opportunity. So with that being said, guys, have a great day, evening, afternoon, night, wherever you're at in the world. I know for some of you, it's the middle of the night, and I can't tell you how appreciative I am for staying up late or waking up early. That's it. I'm probably going to eat some dinner now here, and I'll see some of you tomorrow. Take care, everyone. Have a good one. Bye-bye.